Hey guys, how's it going? Value Venture Investing here today. So, big news today, and it isn't that I burned my nose in the sun. Of course, it's Apple's Q3 earnings, and these were phenomenal. If you haven't already noticed, taking a look at the stock here, as of recording this, we're up over 6%. We're nearing almost $410 per share. Man, do I love it when Apple goes up a lot. I feel really validated. So what we're going to be talking about today is we're going to be talking about these phenomenal earnings. I'm going to give you some of the top line earnings here. We're going to quickly go into their financials and really show you how amazing they are. Then I'm going to go into some things that were said on the conference call that were very important, and I think that investors really liked. So make sure that you stick around for that. But jumping right into it here. Revenue was $59.7 billion. Of course, expected was about $52.3 billion. So a huge beat there. I mean, this quarter, again, keep in mind what's going on in the world right now. There wasn't really super high expectations. This isn't supposed to be a blowout quarter, but wow, look at that beat. And the revenue was up 11% year over year. And this was an all-time record for June. Like, that's just crazy. EPS, guys, earnings per share was $2.58 per share, and expected was about $2.07. So again, a huge beat there. Of course, like I always say, a lot of that has to do with them buying back shares, but also just their phenomenal profitability, their mix going more into services. But we'll get into that a little bit. That's up 18% year over year, and again, a June record in the environment that we're in right now. The iPhone revenue, this was, I think, one of the main reasons that the stock is just skyrocketing right now. $26.42 billion, and analysts were only expecting about $21.3 billion. So we'll get a little bit more into that one as well. And the one that I love the most here, and I think that investors should pay attention to more than anything because it's more profitable than the iPhone, is of course the services. Again, just destroyed at $13.2 billion in 3 months versus 13.1. These seem like they're pretty close, but when you think about that, it's like you're talking about $100 million beat there, even though they look so close. Up 15% year over year, and again, a June record. Again, another really great spot to be in, to be looking at right now is the wearables, home, and accessories. That was $6.5 billion. You're just seeing phenomenal growth in these two, and expected was 6.1, so about a $400 million beat there. And again, their cash pal, even though they want to be going net cash flow neutral, which I hope they do. I hope they do maybe do some great acquisitions, but we'll talk about that later. You're getting close to $200 billion again here, $194 billion. So let's get into the financials right now, take a quick look at what led to some of these numbers and get a little more deep dive into a couple things here. So here on the income statement, we can see products and services here under net sales. Products were about $46 billion a year ago. They're about $42 billion. And of course, we've seen services skyrocket, $13.1 billion, like I said, versus $11.4 billion years ago. $11.4 billion a year ago. Total net sales again were almost $60 billion. That's crazy, versus almost $54 billion a year ago. Of course, their cost of sales went up, but we won't go into that too much. Operating expenses, R&D was about $4.7 billion versus $4.2 billion a year ago. Like I said before to you guys many times, I like to see that increase though, because this is a tech company. Of course, so the total operating expenses were significantly higher at $9.5 billion versus $8.6 billion. Nonetheless, operating income was $13 billion versus $11.5 a year ago, and net income was $11.2 billion versus $10 billion a year ago. Again, like we said, EPS here you can see basic and diluted at $2.61 versus $2.20 a year ago on the basic EPS. Net sales by reportable segment. Now this is the one where sometimes you're seeing weakness in China and everything. Every single segment, man, every segment improved significantly. Americas was seeing issues for a while. I guess everybody was spending their stimulus checks here. $27 billion versus $25 billion a year ago. Europe increased as well. Huge, $14 billion versus 11.9 a year ago. And China, the area that we were really worried about. And you guys got to keep in mind, there's lockdowns there. There was lockdowns in America. I know a lot of sales are online, but they also did close stores as well. It was 9.3 billion versus 9.1 billion. Japan almost beat by $1 billion, 4.9 over $4 billion a year ago. And the rest of the Asia Pacific was 4.1 billion versus 3.5 billion a year ago. So that was total net sales again of 59.6 billion versus the 53.8 billion a year ago. Going to categories, yes, that iPhone, we've seen it return to growth, even though that's not the end all be all, where there's, the company is shifting. You still need that install base, and we'll get into this in a little bit as well. But 26.4 billion versus 25.9 billion a year ago. Seen that improvement, which is great, and all the other categories just destroyed it. I mean, we've seen some good improvements with the Mac. Of course, they've really been ramping up the internals, and this has been actually really bolstering sales. Over $7 billion versus 5.8 billion. Again, their iPads are a beast as well. 6.5 billion versus 5 billion. That's huge. And wearables, home and accessories, again, 6.4 versus 5.5. And the most important, in my opinion, area of them all, services, killing it at 13.1 billion versus 11.4 billion dollars a year ago. So again, there's a total net sales at the bottom there. Just crazy, guys. I'm kind of flabbergasted, don't know what to say. I didn't expect to see these types of earnings this quarter. Looking at their balance sheet, I'm not going to spend much time on this, but remember, guys, to get their total cash, you do include the cash and cash equivalents of 33.3 billion, marketable securities, both short-term, because those are under current assets, and non-current down below there, and that's how you get that. Going to just a very few things on the statement of cash flows, because it's really interesting to see what Apple does with their money, because they're so cash rich here. We saw cash generated by operating activities of $60 billion. Oh my gosh, $60 billion down the corner there as well. Something else I also found interesting here was under their investing activities, you can kind of get a gauge as to, kind of how a company feels about the economy as a whole, and maybe how they feel about their own securities. Purchases of marketable securities was huge compared to a year ago, over $96 billion versus $21 billion a year ago. So take that for what you will. I mean, obviously, I don't know what's going on in the background there, but I think that means that they're taking advantage of some pretty good prices. Of course, they had the proceeds from the maturities of these marketable securities, which was significantly more as well. They did sell 39.7 billion, but not as much as a year ago. So again, to me, that leads me to indicate that they're pretty bullish on the economy as a whole. And I would think that the world's most valuable company kind of has a good idea as to what's going on. Financing activities here, so proceeds from the issuance of common stock, of course, is basically nil. I never really quite understood why companies do just these small amounts. I think it might be to do with restricted shares, but of course, we're not going to get into that too much. Payments for dividends and dividend equivalents, over 10.5 billion. They pay out a massive amount of their cash for their capital return program, even though now their stock price is so high, the yield is quite low. Repurchases of common stock, again, they've been ramping this up. $55 billion that quarter, up from a quarter ago at 49 billion. So again, I mean, go back if you guys want, pause it. Those earnings blew my mind. But this section here, this was basically what I took from the conference call. Very enlightening, and really I kind of saw the shares even respond more as some of these things came out. I was just like, wow. Again, like we said, iPhone returned to growth, 2%. We've seen, I think, for like the last, I don't even want to say, 6 quarters or something, we've seen iPhone growth stagnate. Again, watch my other videos for my thoughts on that, but personally I think it's just the company maturing more, and it's a good thing, and of course they become better off as part of it. We're looking at the iPads and the Macs. We saw that. I wrote this here because they talked about how they were having supply issues producing them, of course with all the issues going on with their supplier right now. But they still had Mac up 22% year over year, and the iPad up 31% year over year. Again, you could look at those on the financial statements there, but wow. They always love to tout this, but it's very important, especially when they're going into services. Installed base hit another all-time record. It just never stops. I don't believe that they gave the number on that, so that was only kind of weird thing about it. But again, it was going to be higher than last quarter, where it was an all-time record again. This, sometimes you wonder if a company's just being ambitious or if they're really gonna double down on their goals. But they had a goal to double their fiscal 2016 service revenue, and they finally achieved doubling that service revenue, and they did it 6 months early. That just shows you that how fast that segment is growing, even relative to their own expectations, which I thought were extremely high. Again, like I said, going forward, services again. Apple TV has kind of had a slow start, and of course it's going to be slowing down a little bit more now with everything going on. But so far they've got 95 award nominations, so some good stuff there as well. They really emphasized the new buyers. I think the one thing that they mentioned was there's like something like 4 to 5 or something people that bought a Mac or some other services, I don't quite remember, look if you need to there, were first-time buyers. And why that's so important is that once you get into that Apple ecosystem, I know because when I first started, it's really sticky. It gets in you, and when it gets, because as soon as you have an iPhone and you can take a picture and it automatically goes to your computer, or you can send something instantly there, everything just works perfectly together. You tend to branch out more, and then they're basically going to go to these services, and the services revenue is where they're going to want to focus. So if you read between the lines, that's why they like emphasizing that so much. Again, with everything going on right now, no guidance. But what they did say, which I found was a bit curious, is they said they think that these extremely fast growth trajectories are going to continue, except for the iPhone. And that's phenomenal news, because some of these segments are the most profitable segment, but kind of strange that the iPhone one wouldn't. But again, they said they didn't know. Coming up to this current quarter before, they thought things were actually going to be down. They admitted that, and they were wrong. They saw strength in April and May, I believe, that led to this record phenomenal quarter. So no guidance there, but they're saying they're all going to be basically on the same trajectory except for the iPhone. But I'd argue that the iPhone is going to potentially be going into a super cycle anyway, even though that's not something we necessarily want to focus on all that much, because there's a lot of other areas. But I think with the new iPhone release, that's something, right here, 2 weeks. That's something to keep in mind. They did mention this. I thought this was a good news. 2 weeks, because there's been a lot of speculation that the phones are going to be delayed in September. They said because of supply issues, it's going to be 2 weeks. So that's not so bad, and I think that's probably another reason the stock's up quite a bit, even though a lot of this move as of lately has been priced in. 2 weeks isn't that long. They have perfected their supply chain, so that's not too bad at all. And of course, probably the biggest news that you already heard was the 4-to-1 split. Apple split before, I think it was back in 2011. They did a 7-to-1 split. And I've been reading a lot of people talking online. Perhaps I don't understand this. Doesn't make any difference to the company, but it does at the same time. You want to know all the specifics about a split? I did a video. I'll put it up right here. If not, check in my stock market basics video. And in this video, I explain what a split is. But all 4-to-1 is saying is they're saying for essentially for every one share outstanding, there's going to be 4 now, and the price is going to be divided by 4. So it nets out to the same. You just have more shares at a less price. Now you might ask, why would a company do this? Again, watch the video, but quick answers, there's various reasons. Last time I believe it was to get in the Dow, but it's usually because a company just wants to make their share price more attractive. And it almost seems kind of a little devious in some ways, because people that don't understand how splits work, I hear people looking at stocks being like, oh, Apple's expensive, it's $400 a share, and this stock is cheaper, I should buy that one because it's only $50 a share. They don't realize that share price is irrelevant. It depends how many shares are outstanding, what their earnings are, everything like that. So it's perception, right? So even though there's so many of these brokers out now that do fractional shares, for a lot of a lot of retail investors. Speaking of which, again, guys, there's a link in the description for Webull that reached out to me. If you want to get 2 free stocks, it's a win-win. But there's so many people they're investing now that maybe don't have as much education, who want to get in cheaper. That's a good thing. People see the price is going to be probably $100 a share now. Who knows? It's going to split at the end of August. And they go, wow, that's cheap, and it's going to become more, they can buy more shares for less money, it's easier. That's the reason they're doing it. They're not stupid. It does have that effect. even though it really makes zero difference to the company whatsoever. There is no difference. The value of Apple doesn't change. Your dividend doesn't go up. I've heard all these things, right? No, guys, it doesn't change. But it's always a good thing when a company splits, when they want to lower their share price. It's getting too high. And it's usually a bad thing when they do a reverse split and they're trying to up the price of their company. But again, that's in the video if you guys want to watch that. So this quarter was phenomenal. Blew past my expectations. Of course, I'm extremely happy because this is my biggest position. It's a pretty big position for me. It's like 6 figures. And yeah, the move we saw after market is being pretty phenomenal. I think tomorrow's going to be a pretty green day. We saw a lot of other tech companies beat Facebook, Amazon. So it's been good. What's been going on in the world, even though it's been horrible, it's been really good for the tech stocks. So would love to know what you guys think. Leave a comment down below. Don't forget to subscribe, guys. Thanks for watching. See you in the next one.